Hello there, my name is Miles Pitcher. I'm the owner of Superior Lending. I'm excited today to bring you guys a couple of tips that are some big news. Um, we'll jump into these. First, here's my contact info if you want to scan that QR code that gives you my business card. Also, here's our rate chart. Huge volatility going on in the market right now. We call it whipsaw action. And you can see these candlesticks here just have big movements in there. A lot of the whipsaw action is coming from the Fed announcing that they are going to stop the purchases or taper off the purchases of the mortgage-backed securities, which has helped keep rates low. On top of that, we have inflation coming in play, and we're carefully watching what's happening with the jobs. The emergency relief for unemployment has expired. So there are millions of people that this has expired on, and they should be going back to work and looking for jobs. Interestingly, the jobs reports and unemployment reports are not reflecting this yet. So that's going to have a big effect on where our rates go. But you can see that all in all, the trend over the past couple of weeks has been rates getting slightly worse on us. So we're careful with our clients right now, and we're getting them locked in at great rates. There are still great rates. See last week's video if you want some tips on how to deal with a rising rate environment and how you can help preserve some of your buyers' purchasing power in there. But today, big news. Every single year they come out and announce what the new conforming loan limits are. It's out earlier than normal, and it is out effective way earlier than before. So we used to be 548, 250. That's the 2021 amount. They've announced 625 is the new limit. So anything below 625 is not a jumbo loan. Anything above that, you're dealing with jumbo range loans there. So that's a big deal. The fact that we're in October 2021 and we can start putting clients into this loan, it's amazing. The way that this is working is the lenders are actually funding these loans and they are just holding on to them. They're sitting on them. Once they hit January, they will then bundle them up, package them up, and sell them off to Freddie and Fannie. And that's how they're doing this ahead of time. But it's a very, very great thing for our clients. Everybody knows that prices are up higher than ever. Average loan amounts are higher. This is a huge help for our clients. So for those purchasing, be aware of that. Big deal. If you have clients that are loan amounts are in that 548 to 625 that are in higher jumbo interest rates, they should look at refinancing to get down to conforming loan rates. All right, I wanted to show you one other loan product that we have or update to it. We are getting a lot of clients that are going under contract for a new build, a new construction, and that's great options for them. What we are finding, though, is we are getting concerned about where interest rates can move over the 6 months to a year that it takes for their home to be built. So that interest rate risk is really a big deal. So we have an awesome product for a conforming loan wherein we can lock our clients anywhere from an extended lock of 45 days all the way up to 180 days or 6 months. Very, very cool. There is a little bit of a penalty in the interest rate, not much, to do the 6-month lock. But here's what's cool about it, is that during the construction period, there is a one-time opportunity to float down the interest rate if they are lower than where they have locked. And it's not just a little, it needs to be a significant reduction, not just a little hair, rates are an eighth better. It needs to be quite a bit better than where they locked. But this is a killer opportunity for our clients to put into place an insurance policy to make sure that they are not going to get hurt by interest rates rising on them. And even worst case scenario, that a client, if rates spike up, cannot qualify for the home that they've been building for the last, whatever, year, 8 months, you name it. So in my opinion, this is a no-brainer. There is no risk to the client in doing this. Doesn't cost them anything to do it. Anybody doing new construction should do one of these extended locks to protect themselves. And depending on where interest rates go, this benefit may easily surpass any preferred lender incentive that builders are giving. So take a look at this, be aware of it. As always, I always share, we want to make sure every client understands every fee and that you should have options when you're shopping for a mortgage. Let me know if you have any questions. I hope you have a great week. We're in fourth quarter. Let's have a strong push to the finish line. 2021's been a great year. Have a good one.